Hi, I'm James Thomson. I'm the editor at SmartCompany.com.au. I'm joined today by Sue Prestney, who is the principal at MGI Melbourne, and she's also the spokesman on SME issues for the Institute of Chartered Accountants. Sue, thanks for joining us. Now, budgeting is an extremely important task that any business has to do. When you go to a bank these days, though, they're going to ask you for something called a three-way budget. Can you explain a bit about what that is?
They will indeed, and what that means is simply that they want cash flow budgets, profit and loss budgets and a projected balance sheet that all integrate together.
Right, so that's important when you're going to see the bank, of course, but it's a good tool to have at any stage for any business.
Of course, what it is, it's your roadmap. It shows you what profit you're likely to make, what cash you're going to need, and what your financial position will be at the end of the period that you're budgeting for.
So what are some of the ingredients of good budgeting? What are some of the things you need to look out for as you undertake this process?
Well, it's really all about making sure your assumptions are correct, because budgets are only made on assumptions. And those assumptions are many and varied, and sometimes you just take them for granted. But you need to test each one of those to make sure it's realistic.
So what sort of things would we be looking for? I mean, one way you could approach this is perhaps a SWOT analysis and have a look at the different strengths, weaknesses, opportunities and threats facing your business. What will that bring out when you're looking in regards to your budget?
Well, what your threats and weaknesses will bring out are the things that are likely to attack your budgets. So whether a threat is government legislation, and what would happen if the government changes the legislation, what will that do to your turnover, or what will it do to your costs? What weaknesses have you got? Maybe you have a whole lot of female senior staff who are going to go on maternity leave. What do you do if that happens? And what will it do to your budgets if you can't replace those people?
So when you're assessing some of those weaknesses and threats, where should you be looking? I guess economic forecasts are important, but are there other people you can talk to get a sense of where those issues might crop up?
I think if you look at it from the point of view of global and national economic conditions, there's obviously a lot of information around about that. So that will tell you whether things like interest rate rises are a possibility, whether a fall in the Australian dollar is a possibility. Both of those things have enormous impact on your budgets. And if you think that they're going to change or they could change, you should build that into your budgets and just see, it's called a sensitivity analysis, see what changes will do to the end result.
And for other, say, conditions in your industry, would you be looking at talking to, I guess, industry experts or industry groups? Could your competitor, maybe not your competitors, but maybe your suppliers and customers, could they help you a bit?
I think you talk to everybody, and certainly industry associations will have ideas about what is likely to be happening to the industry. They'll know what they're lobbying government on and what likely changes are going to occur in the industry. In regard to customers and suppliers, you must talk to them because they'll tell you whether your assumptions in relation to how long your debtors are going to take to pay and what payment terms your suppliers are going to give you, how realistic the assumptions were that you've made on those. And if you get those two things wrong, your budgets can be very far out and you could be in trouble.
And at the end of the process, would you recommend coming up with a sort of best, worst, medium type forecast?
I think you should. I think you should not only do that, but also have tucked away a response to those positions and have a response that's considered far in advance. You know, if the worst case shows that you're going to run out of money, it's no point going to the bank tomorrow and saying I want some more money, especially in these economic times. So you need to plan in advance for the scenarios that those budgets pan out.
Forewarned is forearmed. Thank you, Sue.
Absolutely.
Cheers.
That was nice. That was really good.
Yeah?
That's great.
Okay.